Thank you, everyone, for joining us. My name is Jie Huang. I am an associate at Scott Legal PC. Today, we are going to spend some time talking about the E-2 visa requirements and answer the top questions that come up when preparing an E-2 visa application. As many of you may know, Scott Legal PC was founded on an E-2 visa, and our founder, Ian Scott, is currently on an E-2 visa as an entrepreneur, so we know exactly what you are going through. A few things before we get started. Scott Legal PC is a full-service immigration law firm. We assist individuals pursuing various types of visas, including family-based, employment-based, and our main specialty is E-2 visas, and we regularly process a high number of those visas. At the end of this webinar, we will send out a few things. First, we will send a PowerPoint that has all the information that will be covered in this webinar. We will also be sending you a comprehensive E-2 visa guide. We will also send you a link to where you can sign up for additional webinars in the future, and also a link to this webinar as it will be recorded. Finally, this webinar will be available on YouTube, and we encourage you to subscribe to our channel and hit the notification button as we regularly upload videos on various immigration law topics. We will also be sending you a link where you can set up a consultation with us. So today we are very lucky to have Kelly Legrand-Wiener, managing attorney at the firm with a wealth of E-2 visa experience. So she'll be answering these commonly found questions regarding the E-2 visa. And finally, we are happy to answer any questions you may have. You can add them to the chat box or the Q&A box, and we will try and get to all questions. So without further delay, let us move into our questions. Okay, good morning, Kelly.
Good morning.
So why don't we start with the basics? So what is an E-2 visa and what are the key requirements?
All right, so what is an E-2 visa? An E-2 visa is available for nationals of what we call treaty countries. So these are countries that have a treaty with the United States that allows them to have access to this particular visa. So that's the first thing to check. Unfortunately, India and China are not on the list of treaty countries, but there's many, many others that are: the UK, Canada, Spain, France, many, many others. Another requirement is that if you're going to be the E-2 investor, you have to own at least 50% of the company. And if you're going to be an employee, then the company has to be at least 50% owned by E-2 treaty nationals. Another one of the main requirements is that you have to invest a substantial amount to either start up or purchase a company. And we'll talk a little bit more about what counts as substantial, how they view substantial, later on. But besides the substantial investment, your investment also has to be irrevocably committed and at risk. And what that really means for people doing a startup is the money has to be spent. You cannot put money in a business bank account and expect that that's going to work as your investment. It actually has to be put at risk in the commercial sense, meaning it needs to be spent on various startup expenditures. If you're purchasing a company, then irrevocably committed and at risk means either that your money has actually been transferred to the seller, or that your money has been put into escrow and there's only one condition left for release of this money to the seller, and that is the approval of your E-2 visa. So there is that little bit of ability to kind of protect yourself a bit more when you're purchasing a business, because you actually can put the money into escrow. And if the visa was denied, you could have a provision that says that money's going to come back to you.
Right.
Another requirement for the E-2 is that for this substantial investment, you have to show that there's a legitimate source of funds. So where did this money come from? Most consulates take a very high level view. So for example, if it's savings from employment, you're going to show your tax returns. We'll talk a little bit about this later, but if you're applying from within the United States with USCIS, they take a much stricter view. They want to see a really dollar for dollar accounting of exactly where the money was, came from, and then exactly where it's been until it was spent on E-2 expenditures. Moving on in requirements, the company must also be real and operating. So what this means, if you're purchasing an existing company, you're going to include tax returns, W-2s, invoices, business bank statements, website, other things showing kind of commercial operations. For most of our clients who are applying with pure startups, they don't have those things yet. You're going to show that your company is ready to start operating once you get the visa. So you do want to show you have a website developed. You want to show you have a business bank account set up, that you have marketing materials, that you've obtained any necessary licenses, that if you need equipment, that's already there and set up for you. So that's how you're going to show real and operating for a startup. Another requirement is that the company cannot be marginal. So that means that it has to support more than just the investor and their family, and really must hire US workers. So people in the United States have to be hired to work for the company. The investor must be coming to develop and direct the company. So that's an important requirement. Sometimes we have clients that are interested in, kind of a passive retirement in the United States. And the E-2 is not for that. For the E-2, you really have to be taking an active role in developing the company. And finally, the E-2, it is a non-immigrant visa. You have to have intent to depart the United States. That being said, the standard to prove the intent is quite low. Usually you can submit a signed statement saying you intend to depart the US, and that's generally sufficient, absent any, red flags like outstanding immigrant petitions or things like that. So those are kind of our basic E-2 visa requirements.
Thank you so much, Kelly. And now the next question would be, can someone apply for an E-2 visa if they do not live in the country they have a passport from?
Right. So this question does come up a lot. Sometimes people, are nationals of a few different countries. So the answer is usually yes. Usually yes. Like if you have, we have, for example, many clients that have passports in Mexico and Spain. Both of those are E-2 treaty countries, but they can kind of choose which passport they want to use. The only exception is for UK nationals. So there is a requirement for UK nationals. Like let's say you have a UK passport, but you were born somewhere else and you never lived in the UK. You cannot apply for the E-2 based on your UK passport unless you are residing in the UK. They take a holistic view. So if let's say you grew up there, you went to school there, then you went to another country for a few years and got a job, that's probably still okay as long as you kind of come back to the UK and establish some presence there before applying. But if you just have the passport and you've never lived there, then you wouldn't be able to apply. And that's just for UK nationals.
Oh, that's very important to know. Another related question is, do the list of treaty countries ever change?
They do, yeah. So it's for example, New Zealand and Israel were added in the last few years, and I believe Bolivia and Ecuador were both removed. So yes, there are new countries that are added. It's not a fast process generally, and I remember for Israel it was many years that kind of in the making, but definitely worth checking, to make sure that your country is still eligible.
Right. And so once you apply for the E-2 visa, right? So approximately how long does an E-2 visa last for in general?
So it will depend on your specific country. Each country has kind of what we call a reciprocity schedule. So that means kind of the United States will give similar amounts of time on this visa that US citizens get for similar visas in that country. So for many countries, the E-2 visa can be valid for 5 years. For example, in the UK, in Canada, in Spain. In some countries, it's other amounts of time. Australia, it's 4 years. And there are some where the visa is only valid for 3 months. So places like Bangladesh and Egypt, they can only get the visa for 3 months. Every time you enter, whether it's on a 5-year visa or a 3-month visa, you're eligible to get 2 years in E-2 status. So for people who have a 3-month visa, generally what they're doing is they're getting the visa stamp, they enter the US, and then they have to kind of commit to basically staying here for 2 years and building up the company. Hypothetically, they could obviously travel earlier, but every time they travel, they will have to go back to the consulate and get a new visa. For people where the visas are valid for 5 years, obviously it's a bit easier. You just have to make sure you're traveling in and out, at least every 2 years. So you're renewing your status in the United States. And then the E-2 visa can be renewed indefinitely. So there's no kind of limit on how many times you can get the E-2. You can continue to get it as long as you're still qualifying, still running the business.
Right. So I guess it will be important for each individual to remember that even though your visa is valid for 5 years, for each stay, there is a limit for 2 years. So you need to always be checking your I-94 record and see when you need to leave.
Exactly. That's extremely, extremely important. The date on the visa is not, the visa is just what lets you get into the United States. It's the date on your I-94 that you must check every time. And there's often mistakes on it. So you want to really check to make sure you're not accidentally overstaying your I-94, as that can have very serious consequences.
Right. Okay, so moving on to starting a business versus buying a business, right? So how would you say, what is a percentage breakdown of people who start a business versus people who buy a business for the purposes of the E-2 visa?
Yeah, so I think, in our practice, it's kind of 80-20 in terms of, about 80% are people starting a brand new business, about 20% are people purchasing a business. I think, either way is completely viable. It really just depends on kind of what, some people feel more comfortable purchasing a business that's already operating. And certainly there's benefits to that because you can show the business is successful. You can show the business has a history of hiring. But then many people also, I think, are interested in kind of starting their own company and, kind of just starting that from scratch. And it's also a very viable way to get an E-2.
Right. Now, maybe we can now talk about the investment, and I'm sure a lot of our clients here will be interested in hearing. So how much investment is enough for an E-2 visa?
Right. So this is, kind of everybody wants like a specific number, and it's what is in the regulations is there is no set minimum amount that qualifies as substantial. So they don't have a number that says, it has to be, this amount. It really depends on the type of business that you're starting. So for example, if you're starting a service-based business like a law firm or a consulting firm, it's much easier to argue that there's lower startup costs for that type of company versus, let's say you're starting a manufacturing company, like a car manufacturer. There's obviously lots of fixed costs that you have to have. So what the government looks at is what we call the proportionality test. And they're going to look at how much you have invested versus how much it actually costs to start this type of business. If you have a smaller investment, which let's say here is maybe under 300,000, you want to be able to show you've invested 100% of the cost to set up the business. So let's say we take the example of a law firm. We say, okay, this is a service-based business. The costs, hypothetically could be very low. Maybe you've spent 50,000 and you have 50,000 in a business bank account. You want to be able to say, I've spent 100% of what's needed to get this company up and running. I have all my licenses. I have my computers. I have my office space. Like I have my software. Everything that I need to run this company has been purchased. And I've spent 100% of the cost. When we look at really large investments, so let's say you're doing some type of real estate commercial development and the total cost is $100 million and you've only invested 10 million, even though proportionally it's a smaller percentage, because the magnitude of the investment is so large, that would still work for an E-2. So I'd say the vast majority of our clients are people in that first example where you have a much smaller investment amount and you're having to show that you have really invested enough to start up that whole company. So you really want to think, what are the startup costs for whatever type of business I'm starting? Do I have any industry reports, any market research reports that support like what startup costs are for this? And then have I met that? And another thing I'll say about this is even though there's no set minimum amount that qualifies as substantial, some amounts are just going to be too low. We have plenty of people that come to us and say, I'm starting a consulting company. I already own my computer. I'm working from home. I've spent $300. Like that's all, that's just never going to be enough. You always are going to have to look for other things to spend money on. We recommend looking forward a few years. What do you think that you'll need? Are you going to hire employees? Do you need equipment for them? Because you will need to spend much closer to that, $30,000, $40,000, $50,000 mark, even for one of these service-based companies, I think, to really, have a shot at getting the E-2. It's just, you're not going to be able to spend $5,000 and get the E-2 visa. It's some amounts will just be too low. Yeah.
Right. And in those cases, even if it's not completely business necessary to buy something, you may just, buy something else to boost up the investment amount a little bit for the visa, because you do need that that amount to show that you're committed to running your business.
Exactly.
Right. That is very important to know. Okay, now, Kelly, so what would be some strategies for dealing with a weaker case? And you can maybe also explain what does make a case stronger versus what would make a case weaker.
Sure, absolutely. So I think that, when we talk about what are strategies for dealing with a weaker case, oftentimes, for us, we have many clients that kind of have that lower investment amount. So that kind of makes the case a little bit weaker, a little bit riskier. So in those types of cases, you want to make sure that every other element in the case is as strong as possible. So when we look at marginality, ability to kind of, hire employees and earn income. Do you have client contracts? Do you have demonstrated interest from people that want your services? That can be really, really helpful. Have you hired an employee? Maybe you've hired like an office manager to do some initial setup for you. That can really strengthen your case. Do you have a really developed website? Do you have a developed marketing plan, a strong business plan showing how you're going to get where you need to go over the 5-year period? Another thing you can do is kind of get letters from, for example, local chambers of commerce or business organizations. Sometimes clients will speak to them and they're willing to write letters saying that, this type of business is going to bring, economic benefit and jobs to the area and is, they're supportive of the application. You can also get, if you have that lower investment amount, those industry reports I mentioned or market research reports that show yes, it's viable to start up a marketing consultancy for $5,000. And then you're able to say, well, I've spent, $40,000. So I've spent well above what 100% of the cost is to set up this type of business. So I think that's really like if you're whatever part of the case is weak, you really want to do as much as possible in the other areas to get that to get that stronger. And when we're talking about what is a strong case, obviously a larger investment amount can be stronger. That being said, it does depend on what expenditures you have. Are they strong expenditures? Are they weak? Like weak expenditures would be things like travel, hotel rooms, food, that type of business development expense is really not viewed favorably. Similarly, if you have a car, but it's not directly linked to your business. So like if you have a taxi company or you have a construction business and you need to haul, things in your truck and it's a commercial vehicle, a car is a fine expense. If it's just you're a consultant and you want to be able to have your car to, drive to your clients' places and also drive home at the end of the day, that's really not going to be viewed as a very strong expense. So that's another thing you can consider is what expenditures have you made and are they strong? Are they directly related to the startup of this type of business? So I think those are the things you can do to make your case stronger.
Right. Very, very helpful. So related to what we've been just discussing, so maybe let's discuss a little bit about the need to hire employees, because that is a question that we do get a lot. Do E-2 investors have to hire employees? And also the related question is, does an investor need to hire employees before applying for the visa? And does an employer need to hire the employees after getting the visa? And also a related question is employees versus independent contractors. Is it possible to just hire independent contractors?
Yeah, so these are all extremely common questions. So do you have to hire before you apply? The answer is no. There are some consulates that are very, kind of will take a strict view on this, and they do want employees before, before you actually get your E-2. But it's not a requirement. And we have many, many hundreds of people that have applied, and they apply on the strength of the business plan. And the business plan is a 5-year business plan that shows we will have employees, and here's the timeline in which we'll have employees. And we try to encourage that people will hire within the first year or two, at least a couple employees. And then by year 5, ideally, you would have at least 3 to 4 employees, and perhaps more depending on what type of company you have. So you do not have to hire employees before you file the petition, but you do have to show that you have a reasonable plan for getting the employees hired by year 5 if you're doing a startup. If you are applying with a business that you're purchasing, I would say in that case, we would strongly, strongly recommend that you're purchasing a business that has employees already. If you're purchasing a business that has a history, and the history, there's no hiring, that's going to be quite weak for your case, because now you're having to show that you're going to change the business model and get employees in there. In terms of, independent contractors versus employees, it is hypothetically possible to hire just independent contractors, but we never recommend it. And if you were going that route, if you were saying, okay, I'm applying for a renewal and I just have independent contractors, you need to be able to show that you've paid hundreds of thousands of dollars to these independent contractors to show that you've gotten that magnitude of economic impact. And you would probably also want to be able to argue that in your industry, it's very common to pay people this way. So there's some industries where just inherently independent contractor relationships are much more common. If you can make that argument, if you can show you've spent hundreds of thousands of dollars towards this labor, and even then, I would say we still will always recommend you have at least 1 to 2 W-2 employees. So is it possible to apply with just independent contractors? Possibly under certain circumstances, but you weaken your case, and you're going to strengthen your case a lot more if you can show that you've actually hired at least a few people in conjunction with all this money you paid to independent contractors.
Right. That is very helpful to know. Okay, so it seems like at least also in the context of showing the potential of hiring employees, the business plan will be a very important part of an initial petition for an E-2 visa. So what should be included in an E-2 business plan to make sure that we're hitting all the right points?
Right. So the E-2 business plan is really, really important for startup companies. You want to have a really concise executive summary that says, who you are, what you sell, who you sell to. Very often the officers really, that's maybe the only part they read in detail, and the rest of it they might just skim. So you really want to have a very concise, here's what we do, here's what we sell, here's, who our market is. Then you should also have a description of kind of the services and products and your pricing. You want to have kind of an analysis of the target market. You want to have a detailed kind of marketing and sales plan. How are you going to market your products? Who's going to buy from you? And then you want to have kind of a 5-year personnel plan, the hiring plan we talked about, that's very important, and 5 years of detailed financials. So a profit and loss, a balance sheet, and a cash flow statement for 5 years. And there should be kind of some, written explanation that gives the officer the basis for understanding, okay, if we say we're going to earn, $1 million in revenue by year 5, how are we going to get there? What realistically, like in terms of our pricing and our business model, means that we'll get there. So you want to be thinking about that the numbers should make sense, and you should be able to have a common sense, discussion with the officer explaining these financials.
Right. And one question that we had pop up a little while ago is, what will we need to know before going in an interview? So you kind of mentioned it a little bit, that you may be having a conversation about your business at the time of the interview. So how should an applicant be prepared?
Sure, absolutely. So when you go for your interview, you really, at that point, the officer has read your application, and you should be able to kind of, from a credibility perspective, reflect back to them any answers to questions they have about whatever is in that petition. So that means you want to be really familiar with the index. You want to be really familiar with the cover letter. You want to know how much your investment was. You want to know how much money you spent on various things. You want to be able to explain what your source of funds was. If they have questions about the business plan, well, how are you going to market here? What are your financials going to be there? You want to have those explanations. So in terms of, what you should know for the interview, you should really be extremely familiar with everything that's in the E-2 application and be able to discuss it, in detail, so that the officer feels comfortable that you do have the skill set to actually come to the US and run this business. You understand what the business is doing. It's a mistake for an applicant to have, for example, like a professional business plan writer write a business plan, and at the interview, if the officer says, well, how did you come up with these numbers? You need to be able to explain where those numbers came from. It's not enough to say, well, I had a professional business plan writer. No, like they expect you as the owner, the investor, to know everything about this business. It's okay to have that discussion with the professional who drafted the business plan and say, hey, how are you getting to these figures? But you need to be comfortable with it, and to really be the expert on your application, and almost kind of think about it like it's an elevator pitch, right? For this business. Why is this business going to be successful in the US? Why do you meet each of these requirements? Talk about the hiring that you're going to do. So that you really want to use the interview to advocate for yourself and to advocate for kind of why the company meets each of these requirements.
Right. It definitely seems like that is a place where some practice and some rehearsals may be very, very valuable before going in there.
Absolutely.
Okay, so going back to the business plan question. So another related question I get a lot is, do all E-2 applications need a business plan?
And yeah, and the answer is no. If you're purchasing an established, successful business, you've got 3 years of tax return showing steady revenues or growing revenues, good profits, many employees, you may not need a business plan in that case, because you already have, when you look at the marginality requirement, you don't need a business plan to prove the company's going to hire workers. It already has workers. And so you're able to show you've purchased, the assets, you've purchased the equity, and you're going to continue employing these people. In that case, a business plan may not be necessary. In a startup situation, yes, a business plan is always going to be necessary, because you don't have any other proof that you are going to meet this marginality requirement, or to show the company is going to be real and operating. In that case, the business plan is really, really key. But if you're purchasing an established business, then you may not need it.
Right. Okay, so now moving on to investment. Now, there are some questions that I get where wondering whether you need to invest in the US, or can you also include expenditures that you make in a foreign country, for example? If you hire someone from your home country to design your website, for example, can I include those in my expenditures?
Exactly. And yes, you can. So you can include expenditures you make outside the US. There is no requirement that all of your E-2 investment needs to be spent in the US. That being said, the visa is there to facilitate, economic benefit between countries. And we have at times seen officers who do ask, have you spent money in the US, and how much have you spent in the US? So again, it's not a requirement that you do it, but we recommend it because we think it just strengthens the case. And if you do get an officer that focuses on that, it puts you in the position of being able to say, well, yes, here's the money that I spent in the United States, while also reiterating, that's not a requirement. But we think it is helpful. Just the optics of it are helpful.
Right. So it could strengthen your case based on your circumstances to invest in the US. Right. Okay. Now moving on to some procedural questions. So what is administrative processing, and how does it impact E-2 visa applications?
Sure. So administrative processing comes up when your visa application has been flagged for further follow-up. And usually what will happen is you go to your visa interview, and instead of getting told you're approved or you're denied, you get a form. It's called a 221G, and it is a technical denial. And it's saying you're put in administrative processing, and it might mean a few different things. Sometimes you're put in administrative processing because the consulate itself wants more information from you. This might be more information about your company to prove you're qualified. It might be more information about you specifically. For example, if you had any criminal issues in your background, they may want particular disposition documents. If they have questions about your immigration history, they may ask for more information about kind of, all of that. However, administrative processing can also come up when your application's been flagged by any other agency. So other agencies other than the Department of State might have flagged your application for any number of reasons, often security reasons. And when that happens, ultimately, there's nothing the consulate can do to move the application forward until that agency has cleared the application. So the frustrating thing about administrative processing is there are times where you're put into it, and if you don't have that clear ask from the consulate, like they want to see a specific document, you may be in it for a few weeks, a few months. We have some clients that have been in it for, even a couple of years, depending on kind of the level of security concern. There's kind of limited things you can do other than submitting follow-ups. That being said, I'd say the majority of our clients who are put into administrative processing are ultimately approved. It just may be a bit of a delay before you get there.
Right. So it will be important to know that this happens. And once it does happen, there are ways to respond to it, but there's nothing to be freaked out about, but it does happen.
Yes. Yeah.
Oh,
It can be an inconvenient thing that happens. Yeah.
right. Okay. So after the last 2 presidential elections, has there been any impact on E-2 visas? Because I know that for a lot of immigration policies, there has been changes.
Right. So there have been a lot of changes over the last several years, but the presidential elections really have not impacted E2s one way or the other. The approval rates kind of stayed consistent over all those years. And many visas were impacted greatly by various actions of administration. The E2 is not one of them. So that has stayed consistent, through different administrations.
Yeah, and I understand that approval rates are usually quite high for E-2 visas traditionally.
Yeah, right. Yeah, high 80s, low 90s. Yeah.
Right. And what impact has COVID-19 had on E-2 processing?
So COVID, unfortunately, has had a very significant impact on all visa processing, E2s included, and E2s continue to be impacted by COVID in the sense that many consulates kind of are still building back their staff, still building back their capacity, still some of them undergoing issues with kind of having very small waiting rooms and not having enough space to do social distancing. And what that means is that the wait times are longer. So at some consulates, we've kind of gotten back to almost a normal pace. For example, in London, they're very organized. They take about 45 business days to review, and then you can usually schedule an appointment within a few weeks, which is great. Then we have some consulates like Rome, where they're, processing E2s from July of 2021. And we have some consulates as well. Chile is one, I believe, where they're just not processing E2s at all. So that's to say that COVID is still having an impact. However, many consulates are open. Canada is another that's processing, relatively quickly to kind of get an appointment. That the appointment may be a bit long dated. But so that's just to say that where you are does make a great difference in how fast E2 visa processing is happening. And it's something you want to discuss with your attorney in terms of whether you have any other options available to you. For example, if you're residing in the United States in a long-term status, like student status or something, you may be eligible to apply in Canada because they will allow for third country national processing for people who are residing long-term in the US. So it's something to consider because wait times can be quite long at various places. But overall, I'd say we're in a much better place now than we were, last year for many of the consulates.
Yeah, very good to know. And it is very helpful to know that it differs by consulate to consulate. So it is very important to check with an experienced attorney to see whether your particular consulate is processing. Okay. So maybe we can move now, shift gears a little bit, talk a little bit more about the source of funds, because that is a area where people can get confused a lot. So what exactly is a source of funds requirement, and what issues can come up with regards to the source of funds?
Sure. So the source of funds requirement, I think, it can be a complicated issue with a USCIS filing. Also, like there are some consulates that are a bit stricter on source of funds. London is one of them. Argentina is another. And so I'd say like where issues can come up is kind of, do you have the documentation for the source and then the trail? Because if you're going with USCIS, then you really have to have the exact what was the source. And even if the source was like dozens of years ago, USCIS sometimes will want to see that money being held over that period of time. So let's say you sold a property 10 years ago and you're claiming that's your source of funds. for this E-2 investment, you need to be able to document the sale from the 10 years ago, proof of you receiving that money, and then proof of where that money's been for that entire 10 years. And I think that's where issues can come up if people have been transferring money in and out, or if they're arguing that it's money that's saved from personal savings, and in the accumulation of funds in their bank accounts, they have lots of deposits from other sources other than their pay statements. That can become quite complicated. So if you do have a very complex source of funds, with lots of different, and the trail being very complex, sometimes it is best not to apply with USCIS. It can be best to apply, at a consulate if it's at all possible, because you want to, consulates will take that higher level view, and are more accepting of kind of that documentation that just gives that big picture versus USCIS wanting an exact dollar for dollar accounting of where that money was from.
Right. Very, very, very important point. The distinction between the USCIS filing and the consulate filing on the level of detail that is expected with regards to the source of funds and also the trail of these funds. Okay, now let us move on to a very common question also, is whether business owners can get E-2s in a partnership arrangement. So can two owners both get E-2 visas for the same business?
They can, yes. So it is possible to do if you are 50-50 owners. So that's the only way both of you can be E-2 investors, is to have that 50-50 ownership split. And if you, let's say that both owners are Canadian, and they absolutely don't want to do a 50-50 ownership split. One person's going to own 70 and one person wants to own 30. In that case, the 30% owner could apply as an employee, but let's say that it was, the owner is 70% is a Canadian national and the 30% owner is a Spanish national. That's not going to work from the E-2 perspective, because if someone's going to be an employee, they have to have the same nationality as the owner. So if you're looking at kind of two owners getting E-2s as investors for the same business, just know it has to be a 50-50 ownership split.
Right. And if it is a 50-50 ownership split, and the two investors have different nationalities, that is okay, as long as both nationalities are treaty countries.
Exactly.
Right. And what happens to the investment amount requirement then? Does it mean that each investor needs to invest lower than what they would if they're only the sole owner of the business, or does it not change? Does the substantial investment requirement amount stay the same?
So, I mean, the substantial investment requirement stays the same. I'd say usually, a recommendation is that the investors try to invest similar amounts. It's really not going to work. Like each investor on their own has to meet each of the E-2 requirements. So that's how you want to think about it. So if one person's investing $5,000 and the other person investing $150,000, the $5,000 person is really not going to meet the requirements, right? So you want to look at, what are the startup costs for the company, and is it possible for the two investors to kind of equitably, doesn't have to be exactly the same, but pretty much invest a similar amount. One thing that you should not do is you should not have a situation where there's two investors and one investor gifts the other investor all the money. In that situation, I think the issue is that it's hard to argue that second investor who is gifted money, is that really that person's money, because it's been gifted by this other, investor who's also putting money into the company. So it's, there's nothing that specifically prohibits it, but it's much more likely, we think, to be scrutinized and questioned. So if it's possible for that second investor to get a gift from someone else, someone outside that ownership structure, that's much better for the case.
Yeah, very important points. Okay, now let's shift gears to after someone gets the E-2 visa and comes in the US and starts operating the company. So what happens if the owners want to make a change to the business activity after the E-2 is approved and they come to the US and start operating their business?
Yes. So this is a very common question. If you want to make a change to your business activity, what you need to do is you need to get approval from the consulate or USCIS before you make that change. And that's only the case if it's a substantial change. So Generally, what you want to do is kind of talk to your immigration attorney to understand, does this seem substantial or not? So let's say, for example, that you have a wedding photography business and you want us to kind of start doing a blog, with kind of the wedding photography and also talking about other, wedding vendors. That's probably fine, right? There's a real link between wedding photography and having a wedding, products blog. Like it's almost like a natural outgrowth of what you were doing. Probably not a substantial change. So, you could just start doing that without really getting any approvals. Let's say instead that you want to switch your business line and open a restaurant. So or maybe you want to keep doing wedding photography and open a restaurant too. That's really a substantial change. It's just nothing like the business that you presented to the consulate. Therefore, you will need to go back first, either to the consulate or to USCIS and say, this is what I'd like to do. They might ask for additional documents. They might ask for more proof of investment. And then once you get that approval from them, then you can start operating the new business. This is a really key point because we unfortunately have people that sometimes come to us when they're already at the stage of having completely changed their first business line. And they think just because they have a valid visa, they're maintaining their status. And they're not. If you started a business, running a restaurant, and you shut down your restaurant and now you're doing consulting, you're really not maintaining your status at that point. If you shut down your restaurant, but first got an approval from USCIS or the consulate to do consulting, then you're fine. So you just always want to keep in mind that you were granted a visa for a specific type of business that you presented to the consulate. And if that's going to change, talk to your immigration attorney first so that you can kind of get the advice you need to make sure you're maintaining your status as you move forward.
Right. That is very important. And our consulates and USCIS usually responsive when we, submit those requests, advisory opinion requests for whether something's a substantial change or not.
Yeah. They're usually quite responsive.
Right. Okay. Another question that we often get is if it is possible to qualify for the E-2 visa by purchasing a business from a family member. Now, what will be the risks involved with that kind of activity?
Yeah, so it is possible. You can certainly purchase a business from a family member, but you're likely to be much more scrutinized. Generally for determining if the purchase price of a business is substantial, consulates and USCIS are happy to rely on basically market forces, the fair market value of a business on the open market. An unrelated seller is selling it for this amount. That's a substantial amount because that's what you purchased it for. That's what they were selling it for. If it's a relative, they're going to look more closely at the investment amount and look more closely at that in relation to what are the financials of the company saying. So you may want to get a third-party valuation or a letter from a CPA discussing the financials of the company and explaining why the purchase price, is a fair market value of that company. If the company is extremely successful and has, huge net worth and your relative is willing to sell it to you for, $50,000 for 50%, that's going to be looked at, more closely. You really need to be able to make a legitimate argument as to why this is substantial in light of, how valuable the business is. So you want to just have those protections in place, have that objective evidence from a third party who's not related. So the officer feels comfortable that even if you're purchasing it from a family member, the amount is, realistic and substantial.
Right. And we did just get a question pop up related to what we just discussed regarding the substantial change of business. So someone asked here, what if you want to change the location of the business from one city to a different city in the same state? Would that, be a substantial change where action will be needed?
So generally, no. I think that, there's one consulate, Toronto, where they will ask, that you update them if you move the office location. But it's not the type of thing where you would need to get advance permission. And I think the vast majority of consulates, like it's really not something you would ever need to report to them. As long as you're doing kind of the same business in that space, then it's fine. What you don't want to do is you don't want to dissolve your LLC or dissolve your corporation and start up a new one. If there's a reason to have to do that, you do want to talk to the consulate, first, or speak with your immigration attorney first to figure out if there's other options. But if you're just moving your city, that's not a substantial change. That's fine.
Great. Thank you, Kelly. Okay, a few more questions left. So what are some common reasons now for E2 denials? Why can an E2 be denied?
So, I think, a few things that come up consistently, so one is a low investment amount. There are always people that will kind of try with very, very low investment amounts. And some consulates are more receptive and some are less. USCIS is pretty receptive to low investment amounts. Canada, I'd say, is pretty receptive to low investment amounts. But there are some places, particularly, in Asia, Japan comes to mind, where they're used to seeing much larger companies. And so sometimes lower investment amounts are not, not accepted there as readily. Other things that can come up for denials if you have a kind of risky type of business. So certain business types are just more risky for E2s. For example, real estate is very heavily scrutinized. There is always a concern that you're just purchasing real estate, it's just passive property ownership. Other things that can come up, filing location. So again, like there's some places that are more E2 friendly, some are less E2 friendly. There's some places that just, usually they're used to seeing multinational companies. They're not as friendly to kind of small startups. Another thing that can come up is kind of concern about whether jobs will be created. So I know somebody asks like whether it helps the E2 if you run a similar business. And I think this can kind of work for or against you. So on the one hand, yes, it can be very helpful if you have a track record of success running a similar business. I think one area that can be a risk is if you ran a similar business in your home country for many years and you never hired employees. And now you're going to come run a similar business. In that type of case, we'd recommend you have an employee by the time you file. The reason being that they're going to look at your history and say, well, you ran this company for 10 years, you didn't hire employees. Now you want to come here, you say you're going to hire employees, but I think it's much harder for them to kind of believe that that's really the case because for so many years you did it successfully without employees. So I think on the whole, yes, it helps if you run a similar business and it's been successful. If the business has not been successful or you ran the business and never had employees, we can still work with it, but we might minimize it a bit more so that the officer doesn't focus so much on that history.
Right. And I guess a related question is now on the interview aspect of the E2 visa application. Is there anything that we have to bring to the interview?
Yeah, so some of this is, there's a generic list I'll run through. Some of it's consulate dependent. I think like the advice is always to kind of read, once you get your appointment, you'll have an appointment confirmation page. Always read that in detail. That's going to have a lot of what you need on it. In terms of other things to bring to the interview, you should bring your entire E2 visa petition that was submitted. If there's any kind of favorable updated documentation, if you've made more large investments, if you hired an employee, if you've gotten any client contracts, you can bring all of that with you as well. You need to bring your DS-160 confirmation page, proof that you've paid the visa fee receipt. You also want to make sure that you've read the consulate, list about what you're not allowed to bring. Things like cell phones, backpacks, like those things you generally aren't allowed to bring in with you. So you don't want to kind of get caught, with those things there. And then you have to kind of get a storage unit or figure something out. But basically, if you have kind of your passport, your E2 visa petition, and your original, if you have dependents, you'll need your original marriage and birth certificates to get those visas for your dependents.
Right. Thank you, Kelly. So in the remaining time, maybe we can discuss a little bit about renewals. After someone is granted an E2 visa and has been running the E2 visa company, if they want to continue doing so, they will need to apply for a renewal. Now, so what documents usually would have to be submitted for an E2 renewal?
Sure. So generally for the E2 renewal, the most important documents are going to be the company's tax returns and the company's W-2s and 1099s. Some consulates ask to just see the last 2 to 3 years. Some consulates ask to see, everything since the last time you were approved. Some consulates don't have kind of a specific renewal queue, and so they may want to see all the investment documents submitted again. I'd say for most consulates that process E2s on a regular basis, they're really mostly just interested in, what do the tax returns show? what do the W-2s and 1099 show? What is the current profit and loss show? Like, is the company still doing what it said it was going to be doing? Is it earning revenues? Is it, does it have employees? And then on top of that, you can submit anything else that's positive. Like if you're the type of business that has online reviews, and there's many clients, speaking, well of you, or there's been any kind of exciting developments, in business, if there's any big business partnerships to report, anything that's, shows that the company is operating, business bank statements showing commercial activity, lucrative client contracts, those things can all be really helpful. Additionally, this has come up a lot since 2020. If you had many employees, but then, you had to kind of terminate some employees or maybe people left their jobs. Now there's a labor shortage and you're trying to hire. You can also include proof of that, proof that you have actual job postings that are live, that you have been trying to hire US workers. And that, just some of the turnover is just because of, market forces outside your control. But those I think are all really important for the E-2 renewal.
Right. And so you did touch on this a little bit, but in a nutshell, then what makes for a strong E-2 renewal petition?
Yeah, so I think a strong E-2 renewal petition is going to be able to show strong revenues, ideally some profit. Profits don't have to be very high as long as the company is still, has enough cash to operate and to pay its employees. And then at least ideally 3 to 5 full-time, US workers that don't include anybody from the, person's family. That's kind of an independent, separate, worker. I think those are going to be the most important things. And even though the focus really is on the tax returns, we want to go back to, again, the business still needs to be doing that service that it said it was going to be doing several years ago. Or if it's changed, if the focus has changed, that's okay, as long as it wasn't a substantial change.
Right. Very important points. So when you're applying for a renewal, does applicants have to go to an interview, or can the interview be waived at all?
This is very consulate specific. Some consulates like London say no waivers for E-2 interviews. Like, they technically have the permission to do it if they wanted to, but they do not. And then there's other consulates like Toronto, for example, where they will, they will potentially waive your E-2 interview, but it's very ad hoc, like it's really all over the place. You have to meet a certain set of criteria. You have to it has to be, your home country. You can't ever have had any visa denials. You have to have been issued a visa in the past. So there's certain criteria you have to meet. But it is possible at some consulates. When it is possible, it can be very, very, kind of helpful for the applicant. They don't have to go through the stress of going to the consulate again. Although something to keep in mind is you cannot just mail your passport from the United States, to the consulate to get the visa stamp. You have to actually physically go there.
I see. And generally, should you apply at the same consulate that you got your initial E-2 visa for your renewal?
So I think this is very fact specific. I'd say for most people, yes. For most people, there's a benefit to doing that, right? Because this is the consulate that initially approved you. So they, ostensibly should have some confidence in renewing. They won't really be re-examining the initial documents as closely. There may be certain circumstances where, perhaps the applicants, wants to travel to particular places. There may be a circumstance where it's better, to apply somewhere else. But I'd say for most people, they should be applying or reapplying at the consulate they initially were approved at. Just assuming that if they didn't have a negative experience there the first time.
Right. Okay, Kelly, I believe that is all of the questions I had prepared for you today. I do not believe there is any other that have trickled in. So, all right, well, thank you so much for your time. I am sure this was very helpful for our attendees who are considering an E-2 visa. And as a reminder, this webinar is recorded. We will be sending you a link, and you can feel free to sign up for a consultation with us through the links in our website. All right. Well, thank you so much. All of you have a great day.
Thank you.